Welcome to ForexToolShop, the #1 Forex robot reviews and ratings site on the internet.
Forex is another word for the foreign exchange market. It is a term that refers to the market where one currency is traded for another, most often through a brokerage firm and on a trading platform. As you see in front of me, this is the MetaTrader 5 platform, and on the left you see the currency symbols. Now, if you don't know what a currency is, the US dollar is a currency, the Japanese yen is a currency, the European euro is a currency, and this marketplace tries to find a price where you can value one of the currencies versus another currency. For example, we're looking at the price of the euro versus the US dollar. So right now, 1 euro is going to cost you 1.38672 US dollars. Many times I try and explain the currency market or the Forex market to that of the stock market because the average person is more familiar with the stock market. The stock market goes up and down. Currencies go up and down. There's reasons that a stock is going to go up. If it has good earnings, if it comes out with a new product, more people are going to want that stock. The value of that stock is going to go up because then when they release dividends and their earnings are strong, the idea is that that stock is going to continue to go up. That same idea is held in currencies, except the reasons for why a currency would go up and down are different than that of the stock market, although there are many similarities. For example, the main force behind what drives a currency up and down is interest rates. Right now, the European zone has higher interest rates than the United States. Therefore, the euro has gone up substantially. Let's zoom out to a daily. It's gone up over a certain time period, that time period where they were raising rates, or they were talking about raising rates, or there was news that came out that said that we may need to raise rates. Those are all reasons why currencies go up and down. Some participants in this market are simply seeking to exchange a foreign currency for their own. Maybe they have an operation in Europe and they need to pay the US workers. They would go out and they would exchange the value of these currencies to pay those workers. That is one case. Another case is governments. As a country, we import and we export products. The United States has a lot of products from China, for example, or we have a lot of technology from Japan. So we would need to go out and purchase these goods using the other currency. A large part of this market, though, is made up of currency traders who speculate on the movements in the exchange rates. Much like others would speculate in stock prices. Currency traders try and take advantage of even small fluctuations in these exchange rates. If you look at this chart and I told you, and I didn't tell you what it was, you might not know that this is a currency pair. The average person would probably say this looks like a stock chart. Well, the same premise is held for the reasons people buy currencies and the reason people buy stocks. In the foreign exchange market, there is little or no inside information. Exchange rate fluctuations are usually caused by actual monetary flows, as well as anticipations on global macroeconomic conditions. Significant news is released publicly, so, at least in theory, everyone in the world receives the news at the same time. Now, if we can go through this chart, you can see that there's many times where there's spikes. This most often is caused by some sort of news coming out. GDP maybe. How fast is our economy growing? CPI, PPI. Is there inflation pressure? Are the prices of our goods going up faster than we would like? Unlike stocks and future exchanges, the foreign exchange is indeed an interbank or an over-the-counter market, which means that there is no single universal exchange for specific currency pairs. So there's no New York Stock Exchange, there's no Tokyo Stock Exchange. This is all done over the market, over the counter market. This is a market that operates 24 hours a day, 5 days a week, between individuals, Forex brokers, brokers and banks, banks with banks, and so on. If the European session is ended, the Asian session or the US session is beginning. So all the world currencies can continually trade. The Forex market values currencies versus each other. So it's the marketplace where we can find out how much is the US dollar worth in Japan, how much is it worth in Europe, how much is the Australian dollar versus the US dollar. And there's a number of currency pairs that are involved. The most popular currency pair is the Euro USD, and the list just goes on. The British pound is popular, the Swiss franc, the Australian dollar, the Canadian dollar, the New Zealand dollar. So that is a basic rundown of what Forex is. It's the marketplace where currencies are valued and they're traded.